Okay, so you had an incredible bull run in crypto. That's the good news. But the bad news is that you're probably facing a massive tax bill. Today we're going to break down a really sophisticated strategy I've been working on with a client that's not just about deferring your taxes, it's about actually using them to multiply your wealth for decades to come. Let's get into it. So let's say you did it, you nailed it, you timed the market perfectly, and now you're looking at 7 figures of profit. First of all, serious congratulations there. But you know what's coming next, right? With great profit comes a great tax bill. And that tax bill can be staggering. I mean, if you live in a state like California, cashing out $1 million gain could cost you $500,000. And that's a massive, massive chunk of your profits just gone to the government. And that's the heart of crypto's $1 million tax problem. The real question isn't whether you're going to pay tax or not. It's how you can protect that capital and see if you can keep it working for you for the years to come, instead of just handing it all over. So let's start peeling back the layers of this pretty amazing solution I've been working on with a client. Okay, so level 1 of our defense is this basic shield, and it's called a charitable remainder trust. We're going to refer to it throughout this presentation as a CRT. This is the foundation for everything else we're about to talk about today. So what is a CRT? Well, you can think about it like a tax-exempt vault. You can move your appreciated crypto into a CRT and actually sell the crypto within the CRT without triggering a capital gain. That giant tax bill we've just talked about gets massively kicked down the road. And get ready for this, because this is the first bonus here. The second you fund your trust with crypto, you immediately get a charitable tax deduction of about 10%. So let's say you put in $2 million, for example, you immediately get $200,000 of charitable tax exemption. So if you have a larger portfolio, I've just saved you so much money just there. And this right here, this is the power of the CRT. Your assets are basically 100% tax exempt while they're sat in the trust. That is huge. That means you can sell the crypto, turn it into cash, reinvest again without taking any immediate tax. All of it keeps working for you. But you know, a standard CRT does come with a little bit of a catch. We're going to have the solution to that catch as well in this video. It kind of forces you every year to take a specific amount of payouts. So for level 2 of this, we're going to upgrade that whole system so that we can take back control. And we do that with a much more flexible tool, the Nimcrut. Okay, so here's the difference. A standard trust forces its payout on you every single year. Let's say that payout is 7%. That's 7% whether you want it or not. You actually cannot say no. And Nimcrut, though, is way smarter. It only pays you the lesser of either 7% or the trust's income. And the beautiful part is you can control the income. So a Nimcrut stands for Net Income Makeup Charitable Remainder Unitrust. And that makeup part at the beginning is key. You see, if you structure the trust so it has no income over the course of a year, guess what your payout is? 0. But if we had a normal charitable remainder trust, it would be at 7%. We no longer have to pay that. So instead of paying it, it doesn't just vanish. It gets tossed into a makeup account, and that rolls over year on year. And what that does is it builds up this massive balance that you can tap into later. Right, all of this sounds pretty amazing, but hold on a minute. There's a problem, isn't there? You're a crypto investor. You want to sell your crypto at the top of a bull run. But if we sell our crypto, doesn't that create a huge pile of income within the trust? And yes, under the normal Nimcrut rules, that would force a massive payout. And you probably don't want that. So should we solve that problem as well? And that brings us to level 3, the killer feature. And this is an absolutely ingenious layer on top of all of this that helps the whole thing work like a spigot. And that gives you complete control over when and how much you get paid. And the secret to solving that whole forced payout dilemma and really assuming complete control over the situation is adding this one more brilliant layer to this entire structure. And that layer is a plain old LLC. That's a limited liability company. But if you place the LLC inside a Nimcrut, essentially your crypto doesn't actually sit within the trust. No, it sits inside the LLC. The trust owns the LLC. And this LLC is the ultimate shield. And it provides this perfect firewall between all of your trading activity and what the trust sees as its official income. Do you see where I'm going with this? This is how you control the spigot. It's so clever. So step 1 is you would sell your crypto, but you sell within the LLC. And the cash just sits there inside the LLC. And step 2 is the magic part, because all of that cash hasn't actually been distributed from the LLC to the trust. The trust itself has zero income, which means zero forced payout. You can essentially wait for years, and it's only whenever you're ready that you can move the assets from the LLC to the trust, marking it therefore as income. That's how you structure it, and that's what creates the income. You simply turn the spigot and you generate that income for yourself, totally on your own terms. Now, I know what you're thinking. It sounds pretty much too good to be true. So it's absolutely essential that we talk about the reality of this strategy, the catches, the risks, and what's the real goal here. And yeah, there are definitely catches, but let's be clear. This is a long-term play. Your money's locked in. You can't just borrow from it, for example, because the IRS looks at that as something called self-dealing, and that's a huge no-no. And most critically, this entire strategy is built on the premise that your assets are going to grow over time in value. And if they don't, your capital actually just gets stuck, which of course leads us to the most important question of all. If all the money is locked up and you can't really get to it that easily, what on earth is the point of doing all of this? But the point of this is the mind-blowing power of deferred compounding. So really it comes down to two paths. You've got two options. Option number one is that you sell your crypto and pay the tax on it. Like I said, in California, if you make $1 million in profit, you're likely paying $500,000 in tax. That's gone, poof. But with this strategy, you have option two. And this is where you can take all of that $1 million in profit and grow and compound them by holding them in this Nimkrut structure. And you're compounding it tax-free for the years to come. So over decades, the growth on that extra money that you didn't hand over to the government can be astronomical, because it's a whole cyclical reinvestment strategy without paying any taxes. So using all of that cash that you haven't given to taxes to reinvest, truly compounding your wealth. So let's just be crystal clear about the objective here. It's not about putting off paying your taxes. No, it's about using this tax strategy as a means to maximize your total wealth over your lifetime. So here's what it could look like for you. Today, you set up the trust and you fund it, and you get that tax deferral for, let's say, the next 10 years or more. So you let that full pre-tax amount compound every year. And when you actually need the money in retirement, you can start to withdraw the funds. And here's another potential pro move for you. You could even move to a state that has no income tax, like Texas or Florida, and do that before you start taking the big distributions. And that will save you even more money on your taxes. All of the examples I've given you, the $1 million in profit, the California residence, this is actually a real client I'm working with, and this is the structure that we've put in place. And he's gonna save about $275,000 on his tax bill. So let's put it all together really quick. The basic CRT gives you that tax-exempt growth and that initial deduction in your taxes as well. The Nimkrut layer on top of that gives you the ability to time your payouts, and that killer feature, the LLC within the trust, allows you to control the creation of the income itself. And every single piece of this whole structure has been designed for maximum long-term after-tax growth. So I'm just going to leave you with this thought. The question actually has to change. It's not just about how do I pay less taxes this year. The real question should be, how do I make sure that my success that I'm having in this bull run actually builds the absolute most amount of wealth possible? And that, for me, that's a lot more of an interesting game to play. As I've said, you've got to work with a professional on this. You can't just do it yourself. This is a really sophisticated structure that you can set up if your portfolio, in my opinion, is over the $250,000 region. So if you're serious about getting something like this started, I've vetted a firm that I'm really confident in working with. We're actually working with them, with my client, to set this whole structure up. If that's of interest to you, the link for them is down in the description. Take this structure, keep it quiet, tell everyone about it, whatever you want to do. It's an incredible thing for people who are about to see a massive amount of money in crypto. Best of luck to you. Stay emotionless. I'll see you in the next one.